Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Monday, 3rd of June, the first day of the week and the first day of the month. We are starting a new month, a new week, refreshed. I hope you had time to review my weekly recap on Saturday. It certainly provided you a good setup for today. I'm going to review my trade setup later, but I really explained and hit a really good setup for today's pullback, and exercising patience, discipline. You can also do these kind of things. But first, let's review the economic data for today because it looks like a little bit worrying. I think today's sell-off since the open, it shows you the fear of stagflation. We all know that services are a sticky part of inflation. Inflation, it's bouncing a little bit. It's causing concerns to a lot of investors and analysts. And more than that, the economy, it's not really strong enough to really push the narrative that we had before on earnings at the first part of the year, saying, okay, inflation is higher, but we are still seeing growth. Today's numbers are a little bit worrying. ISM manufacturing PMI came for May 48, lower than the 49, and we were expecting 49.6. So this is a miss. Employment 51, it's a good thing, but look at this. New orders for the manufacturing, it's plummeting. 45, the previous one was 49, and we were expecting also 49. Prices are also going lower. So we have more misses than, in my opinion, hits for today's manufacturing PMI and new orders. And that caused the market to really pull back a little bit more than expected. I'm sure a lot of people were expecting some kind of pullback or perhaps big continuation, but as you can see, we had the setup prepared down here and the liquidity up here on this pivot. During the overnight, we went higher, hunting that liquidity, and then at the open, we just dumped. And I was watching this pullback to really buy, and I got a really nice trade. And how I do these kind of things, it's pretty technical. In my Saturday's weekly recap video, I told you about this 30-minute inverse and also the 15-minute fair value gap that was aligned with the 50% retracement from high to bottom. So obviously the zone between these two boxes, so basically the midpoint of the 50-minute fair value gap and the midpoint of the 30-minute inverse fair value gap, provide me a really good setup right here. So we got, this is the midpoint of the inverse and the midpoint of the bullish fair value gap. We formed an inverse and we formed a bullish, and I was really expecting to buy down here. As always, my setup usually looks like this, but we never got the pullback. So I was really willing to risk more than usual because this was a nice entry. Remember, this was a manipulation move to the downside into a fair value gap inverse run through. That's one of my preferred setups. So I was basically willing to risk, in this case, 22 points from the high of this micro pullback to the low below the fair value gap. And the target was this pivot that was pertaining to the big inverse that I think was leading the second move down. So pretty good risk-reward ratio, 3.42 for 75 points of trade with one contract, only one, because in these kind of setups, I was just trying to catch some pretty cheap trade. And this is more than enough for me to start the week and start the month. So I'm not willing to risk anymore. I'm going to close. I'm going to share this with you because today's sell-off was, I mean, nobody, at least with experience, would like to buy up here. And as you can see, into the open, we just push lower. And in the first inverse, we just rejected. Sellers, 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 sellers. into a breakdown. This is a pretty good model for the sell model of the algos. And if you have experience, I mean, you know these kind of things. This is not a proper setup to really buy the overnights before moving into the low or having a nice rotation to at least a key point of retracement, as we knew on the 50% that was down here. This was a beautiful setup. We are still in the middle of the pattern. We are still in this zone in which I think shorts will try to recommit, but this setup was there. I'm just done for the day. And overall, we are seeing the same thing in the Magnificent Seven. We are seeing NVDA gapping up 4%, Meta 2%, and the rest struggling. Microsoft really selling off, Amazon in the green, but look at this chop and chop and chop. And I think part of the reason why there's an overall bearish sentiment is because the Russell is selling off 1%. And all the banks, including regionals, are in the red. And that's quite concerning, aligned with the economic data that we got today, showing you that stagflation is still a concerning part of the economy. Energy, it's also selling off due to the possibility, real possibility of a ceasefire on Israel-Hamas conflict. So basically crude oil, it's luckily really selling off. So we are seeing a catalyst for crude oil. But apart from that, the big news today is just the less than expected manufacturing strength numbers. Dollar, it's also pulling back. So that's quite really good to see. We have several setups here that align with a bearish standpoint for the dollar, and we just sold off. Dollar is selling off due to fears of the economy, and also yields are pulling back quite a lot. Look at this. The 2-year yield, it's below this zone that we try to put a lower high. Now it's a lower high, and we are just dumping minus 1.20% on the 2-year, and the 10-year, it's also below these rates. So yields are selling off. The inverted yield curve is showing you a lot of, I mean, the bonds market, it's freaking out a little bit. After this rally, we are now pulling back again. So look at treasuries. Treasuries are 1.26. This is a good news for the big haven of investors buying treasuries. So we have our foreign currency, dollar, yields pulling lower, equities pulling lower. Metals are also quite attractive, so they are also being called for haven. Gold, copper. Copper is a little bit more choppy because Dr. Copper, as you know, it's usually aligned with economy expectations and outlook. But overall, we are just seeing weakness on banks, weakness on small caps that are usually the worst performers of the economy in the stock market. And overall, I mean, we got a nice bounce, but today we are still in the red. Not as much as expected, but we just pulled back from where? This is a key thing that I would like you to show. I would like you to see. Look at where we tapped. We tapped the point of control and we just dumped. And this point of control is from the low of this big move. So there's a lot of volume up here, either taking profits or basically just piling in onto the short side. We are still, I was pretty bullish for today. We bounced from a technical point, the 50% retracement, into a fair value gap. But I would like to see really this inverse being run through and perhaps having a retest and who knows, a big power hour move. But what is true is that today got a nice retracement, pullback, but I want to see then buyers recommit and try to recapture 18,800. Tomorrow, Wednesday, things like that. And then I will be more confident that we are most probably going to hunt all-time highs, which, by the way, was made during the overnight. And markets don't like these kind of all-time highs during the overnight outside of regular trade hours. So if you catch this bottom as I did, congratulations. Don't overstate your welcome. I took my profits in a technical way. Don't FOMO into another trade. My recommendation is just if you took this, congratulations, take those gains and wait for tomorrow. There will be more opportunities, but you have to lock in profits today. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. The trading day is not over yet. We are seeing a little bit of choppiness and overall bear sentiment on the economy. So it's best to really wait and see what happens into the close today, open interest, and tomorrow new data will come out. As always, discipline, patience, risk management are key for your success. Stay safe, everyone, and see you tomorrow.